And good evening. This is the Elliott Wave update for the S&P 500 and the NASDAQ 100 for Sunday, December the 18th, 2022. Yep, 1 week away from Christmas. And of course, what's on everybody's mind? What will the markets do? Are we going to get that end of year rally or not? Or is it going to be a big lump of coal, et cetera, et cetera? I mean, we've got all the pundits out there. Let's take a quick review. I'm going to be focusing here starting on the daily charts and with the S&P. I'm just taking a very quick review of that daily picture without going to the super large picture because I just need to fill in the blanks for where we are now and what we can likely look for moving into the new year. So I gave that larger picture and in more detail for the equity markets, for the treasuries, for gold and silver, and for the dollar. And all of them within their moves, the patterns that they're working under an Elliott basis, do intertwine and do fit against one another. So I think that just kind of spells this pattern that we're likely going to begin to see. And one is that the equity markets will decline. Now, that doesn't mean that they're just going to fall and fall and fall, but it's going to follow pretty much the pattern that I have been working and discussing all along. So, and then that works with the bonds and the bond market, it could just actually find its very intermediate term or midterm low in bond prices and the high for the rates for right now, as these markets begin to go through their next moves. Now, in the equity markets, it's going to be an intermediate wave 3 down as a part of an ongoing primary C wave. And so we're now beginning the middle section of it, basically. Here we are on the daily chart. So inside that primary C wave, going to be 5 waves of intermediate degree, and they're going to be numbered 1, 2, 3, 4, 5. So we have intermediate 1 and intermediate 2 complete. What I believe we've done is we've started to come off in that intermediate 3rd wave, which is going to consist of 5 waves of minor degree. And I believe on Friday, we completed that first leg down of minor degree, or minor wave 1 of intermediate wave 3. I want to put didn't want to do that. Didn't want to do that either. I want to put on some fibs now to show on the daily basis where the intermediate 3rd wave can end up. So I'm going to go start here, go down to the bottom of wave 1 and to the top of wave 3. One thing that you can immediately say, if indeed it is an intermediate 3rd wave down, which I'm leaning very strongly towards, ultimately, this low at 3502, which was the October low, will be broken as intermediate wave 3 unfolds. So now I'm going to slip down to that hourly chart so we can dive into, because actually on the Elliott Wave update, what I am looking to do is just keep more in touch with the day-to-day trading and a lot of the intraday trading and what we can expect to see on that inter-hour basis. So here we have Tuesday's high. So on the 13th, we reached a high at 4180. And that was after release of a CPI number. And then that level was registered, but then pretty much immediately rejected for the balance of the day. So that kind of put a convincing touch and end to this narrative that's been really going out, that the Fed is going to pivot, that the Fed's going to start lowering, the Fed's going to, et cetera, et cetera. The inflation is dead. They were building and building onto that case because it presented a very positive picture over our near to midterm as these markets find their bottom and they begin to rally with strength. And that just is not going to happen right now. And the Fed is not giving any hint or language or presentation that's going to suggest that they are going to pivot. Now, let's realize what pivot means. Pivot would mean right now we're in higher interest rate, and they're considering that they're going to continue to raise the rates pretty much every meeting until they have their inflation rate, or well, inflation, they've got to pull back or reined in and brought back down to a 2% level. Mind you, it's 7.1% right now. So that's pretty wild. It's a big and a very strong goal. Enough about that. I don't want to go into whether it's going to be achievable or not, but their goal is to get it there, and that means that they will continue to raise the rates. So therefore, this idea that rates are going to come down or the Fed is going to pivot basically ceases to be in existence. So we need to pay attention to now what the market is telling us. And we had that, and we had that wave 2, and it ran perfectly. Then we had that was the Fed day. Fed meeting was that Wednesday. And the reaction was sell it. Yes, it did rally. Yes, it did come back. But the tone was clean. Drive, drive. After the news pertaining to interest rates and the Fed not pivoting. Well, then after the news and everything was digested, the next day and during the night, it began, and we had a strong down. But in our pattern and an Elliott basis, we were looking for 1, 2, 3, 4, 5. 5 waves of minute degree to finish that first wave down of minor degree. Again, remember, Elliott wave are building blocks. So we're counting by numbers. So what we're doing is in a minor wave 1, what's going to be inside 5 waves of minute degree. And then as we got into wave 3, what's going to be inside that? 5 waves of sub-minute degree. So we got it all. And again, very clean. And I'm putting that minor 1, which suggests we're going to have a decent rally. Before I get there, the whole entire intermediate third wave does have projections that we'd be looking for at least 33.54, which is where wave 3 would be equal to wave 1. Wave 1 was of good size, so I'm looking for a little bit more. So I do believe that the third wave can bring us down towards 3,000 to 2980. And then from that level, we put in an intermediate fourth wave. We still have an intermediate fifth wave down, which will complete the primary C wave down, and in turn, that cycle degree A wave. And it is from that low that I'm looking for a stronger, more sustained rally phase, more than a month or 2 or 3. We should get a fairly strong move within this B wave up. Now, we'll work out those levels once all the lows are in, and we don't know how severe this cycle A and the balance of primary C are going to drive us down. Ultimately, if we get a low here, we rally up and come back down, we should still likely find our positioning to complete this whole cycle. That's cycle wave A. My thoughts are down in this zone, 2840 to 2770, a little bit below. I would not suspect it can, of course, on the severity that's going to force it there. So in other words, I don't think the market gets here except that the message that's being laid out, or what's happening in reality, is a year-end purge of moving out of stocks that are not perceived that are going to be doing well next year into stocks that maybe have a better chance, and that fund managers, hedge fund, and mutual can place that money in there for a little bit of a longer term or the year. So we have a lot of position adjusting going on in these last 2 weeks. So, and what interrupts them? 2 4-day weeks. So it'll be interesting and hopefully worthwhile. And so what I'm thinking for the very near term, in fact, what I think we may have reached, when I just said that it does appear that we may have gotten down to minor wave 1. First thing I want to do is take off this larger fib, and we're going to talk about some fib retracements, which are going to be for this initial minor wave 1. And that is pertaining that the market holds that low. So we have Friday's low at approximately 38.55. So below that, well, it's just that this fifth wave is not done yet. And we can throw up some additional. And so tomorrow, if we come in and we're lower, you can throw up additional fibs going to just what this 5 is going to look like. And you run those extensions from here at the beginning of wave 3 to the bottom of wave 3, the minute wave, up to the minute 4. And that will give you the extensions for a minute wave 5 down. And just follow them. But at this level, at this rate, and how we've gone down, I'd be looking that wave 5 could be 0.618 of wave 3 or equal to wave 3. And you just work off of those levels. So it's either going to be 0.618 or 1. Okay, now going up from here, what are we correcting? The entire beginning. So we're going to go from this high to that low. And here are our retracements for a minor second wave. Minor wave 2 of intermediate wave 3. Right? So wave 2 will be correcting wave 1. Most common, 0.382, but it's a second wave. Most common jumps are just a tad. And we have 4,017 to 4,055, 56. I truly would not expect it to come up here. Not at this level. And because the narrative, because the narrative has changed. The other was built on not enough evidence. We didn't have hard evidence, so it was hearsay. So that it was a theory. It was well, if this happens and this happens and that happens, sure, it'll be equal that number. But when you've got the Fed coming out and directing, basically saying we're holding the policy, inflation is not under control. It is, yes, it's eased up a little bit, but it certainly is not under control. We're going to stick with our program. We're going to continue to raise rates going through 2023. Boom. So the narrative of they're going to pivot can't really hold right now. They've said they're not going to pivot. Yes, I do expect them at some point to back off a little bit, but it's not going to work because we're going to have a cycle wave B up, and then we have a devastating, hard, and destructive cycle wave C down. And that's out there somewhere. And I'm pointing out as if I'm saying 2023, 24. It's out there. We're going to finish this first part of cycle wave A. So we still have a trip down to 3,000 to 2,900. So yeah, we got some room left for a drop lower. But in the meantime, we are going to rally in a minor second wave. So we're shifting from reality to technical. Again, really, when we've got to put all the derivative products in there and how they trade and why they trade, and they all have a strike price, which is cash. Okay, so it's money, and it's going to have market and where we're going to go and what we're going to do. And if you are managing a fund that trades, you got to go pull it from someplace you don't want to put it in someplace. So you're putting risk on in treasuries or risk off in treasuries. What are we looking for in the equity markets? So we're going to put we're going to put some upside to it. If we're thinking that the market needs to rally, then you're going to set up positions to reflect an upside move. So a lot is going to be going on. And then within that, as those positions are put on, they do most often look at the possibility that we're going to have hedging. And hedging comes when you buy or sell the underlying. So I think we could have periods of buying and selling. And they should fit in an ABC pattern up. Now, will that A wave be flat, or will it be 5 waves in and of itself? It can be 5 wave, A wave, and then it's a zigzag. Point is, I'm looking for a wave 2. Well, we just did a larger wave 2, and it was not a zigzag. It was a mess, and it was hard, and it was a difficult trade. Because it was just, they would make these jumps and then decline all the way back, and then make these jumps and then decline all the way back. And I'm going to tell you right here, look, jump, took it all back. Jump, have now taken it all back. You measure that against that, this one. So did this. These are the narratives. This is reality. This was a narrative. This was reality. So it's what gets spun after whatever caused it really takes hold. This was a 1/10 improvement in the CPI. This was, I believe, a continued improvement in the CPI, another 10th. So overall expected inflation rate on the consumer price index was 7.2. And I think they were looking for 7.3. So slight improvement, not enough, but an improvement. Now, if this is minor one, we're looking for that rally. Going to come in an ABC. Either that's going to be a zigzag. And what I like here, and let me open this up a little bit, get it off of that margin. What I like about this is that it feels pretty good, and they're more in tune to kind of buy it rather than sell it. So I do think that there's kind of like we could be into this mood where the markets will be more in tune to go up. So again, holiday, we've got all of that. But again, please keep in mind, A wave up, B wave down, C wave up. ABC, overlying trend remains down. So surprises, if this can't get very far, but it does an ABC and then turns and we come down and break that, it's going to either adjust the count, or suggest total weakness in the market. Remember, we're in a larger 5 waves down. We've got one. If it's a week 2, and I've seen them, but I honestly would hope that we can get ourselves back to 39.80-ish and then nosedive. We'll get these. They will turn in. If we get it now, it could still be pretty hard. Again, moving into year end, we could have all of that fluctuation. But think about this. We have a rally up, year end type moves. We have a rally down in the form of B wave rally. So year end type moves, moving money from A to B or B to C, wherever it's going. And then we have another rally up, possibly into year end. And that's nothing more, just making adjustments. So it's corrective. And then the selling returns. All right, over to the NASDAQ. NASDAQ, same deal, same puppy. And what I want to do is just go out because I want to put the larger fibs on for a moment. And I'm going to go there. I'm going to plot it there. Down to there. Oops. Down to there. Up to there. All right. So as a part of the larger intermediate third wave down, we've got a lot to go. So we're looking at 0.618, the whole shebang. So the first wave, the minor wave one, kind of not super close, but was heading down towards here. And when I added additional fibs on that internal, and I put them on from here to here to here as a part of where wave 5 could come in, and you see that there was, oops, a pretty good little angle there. So which came in, actually, they're both coming in pretty high. Yeah, sorry. I even had a smaller one, I guess, because I really did have one that was coming in a little bit above 11,202. More around that 76 level, where it got to. That was the actual low. In any case, I digress and I apologize. The wave 5 did come in what I thought could be support, and more than like on the smaller term, it does clean up nicely as a quick 5. So starting this could get stalled because this actually was 1 and then we have 2. But if we had continued downside, that was the whole purpose of putting that fib up. We have 11,202. We have 11,113, 11,095, and that's going to be some overlap right there. And that works. That works. We were still minor 1. We were going to do a minor 2. From here, look for it to continue to build. But on an hourly basis, I'm looking for it could break above the 20, which is 11,390. Then we have the 50. Again, looking for 5 up or an ABC up to form wave A. Another ABC in the other direction to form wave B, and 5 waves up to form wave C. And we're now going to take a peek at where those are. I get the downside fibs I'm taking off. Switching back over, putting up the retracements. And come on right there. Thank you. So 236, that'd be minimum, right? 236, 11,526. 382, 11,681, 11,690, all the way to 11,700 still works. But we got the 200. So here's the gig. On the moving averages, we have the 50 coming in right there where our fib resistance is. Oftentimes when we are trending, when we're working with 5 waves and then 3, you're going to find your resistance, whether you put up your fibs or not, if it's moving real quick. And even within it, you use your 20 and your 50 and your 200 will line up pretty cleanly with 236, 382, etc. So where they are can be resistance, which will also fit a fib picture. Now this minor wave 2 can come to here, come down, and then come up to here. Still working at 382. We know that with a minor wave, we have to include the possibility that goes between 382 to 50% to 618. Can't tell yet what's going to happen. Can't tell yet what will propel it up there should it want to go there. There has to be some stimulus that's going to bring in that picture of everybody's got to buy again. Now, granted, it could be a late move because everyone's now convinced that the market's going to rally and that the low is in, etc. But the reality will tell us different. One, because of the wave count, the structure. If it all fits, then I would be looking for this to come down and come down hard in the minor third wave. So for tomorrow, I, again, cannot call the end of minor wave 1. I put it there because I did like the rally off of that low, but now I need to see that it develops. Without the development, I think we hang out here. We got too much risk to either side for tomorrow. Now, depending again, once we get everybody back at work, et cetera, or the big banks are beginning to trade at the different areas, then fine. Then we'll see. Because again, we have the Asian markets that'll be opening, and then we have the European markets, and then back to us for our Monday session. So ultimately, I do think we come into a minor wave 2. And so we're looking for that ABC. And I'd be playing it to the upside. And we'll get that pretty clearly come Monday morning. Because we're going to see the order flow. We're going to see it coming in on one side. And it's just, there's many reasons, and I don't really care. The wave pattern allows for it. We now have the fibs. Have a great trading day tomorrow. Our next update will be on Monday, the 19th.